Welcome guys to this week's weekly forecast, and today I'm only going to look at the dollar index. The reason why I'm doing this is because I want you guys to be in a position to practice, to make a decision on how to trade the other majors based on the analysis that I would have done. Like for instance, I'm doing the dollar index today, right? So if you are in the mentorship group, you are going to know already how you are going to approach currency pairs like USD JPY, Euro USD, USD CAD. Like most majors, you know how to approach those assets. How are you going to be trading those assets? So I'm only going to do a detailed analysis of dollar index, and then in turn you guys you should be in a position to also make your own decision on how you are going to trade the other asset pairs. So first things first, last week's mentorship video, I told you guys that dollar is gonna gain a bit into our rejection blocks and our bearish order block, and that literally happened. If I just go quickly to a daily time frame, you're gonna see that here we had the dollar trading into our rejection block. And if you remember correctly on the group, I told you guys to take note when the dollar was trading into the rejection block. You go to a lower time frame, you hunt for short trades to the downside, and concurrently you'd also go to say Euro USD or USD JPY. For Euro USD, you'd have been looking for long positions from discount areas such as bullish order blocks, and on USD JPY it would have been the same setup. Price would have been trading into a daily bearish order block, thereby you would have been hunting for short trades on USD JPY. So now looking into the coming week, we can clearly see that in relation to our monthly price action, already the monthly relative strength is to the downside, meaning there's more momentum going to the downside right now on dollar index. Everyone knows that the dollar is weak right now, but to which level? Right, we've got sell stops here, and we've got a fair value gap on a monthly chart, right? And that also surprisingly comes on our monthly bullish order block. So I'm gonna emphasize again what I said last week, that August and September, whether it's gonna happen now in August or in September, we are going to see probably another leg lower, right, on dollar index, meaning I'm still expecting further weakness. If that happens, that the low that we have reached already in August, which is coming in at 92.46, if that happens, that's the low of August, and then we're gonna see a retracement in September, then the low of August becomes crucial. But as it is right now, I'm still of the notion that we are going to see again lower prices on dollar index. I'm still expecting further weakness coming in, and the stimulus package is one to watch. That might be of interest for the bulls on dollar index. So if we jump to a weekly chart, we can clearly see we had a rejection into our bearish rejection block and bearish order block. That's on lower time frames, and then we had price trade lower. So you can see already that last week showed us willingness to trade to the downside. So I'm still expecting the sell stops right at 92.33. I'm still expecting those sell stops to be under attack or violated in the coming week. So the price action I'll be looking for on dollar index is something like this. We could have another return to our rejection block and then we go lower, or we could open lower and tumble to the downside, you see. So this would depend with the fundamentals that have been going on during the weekend, of which there haven't been many, but you never know with the markets. So when you go to a daily time frame, you can see already price has nicely respected our order block, which is coming in here. This is our order block here. We've got our daily order block. That's the one that's controlling everything that's happened up here. All right. So price traded into the OB and fell to the downside, right? Traded again into the OB and fell to the downside. So you can clearly see we've got a range forming on the dollar index. We've got a range on the daily time frame, right? We've got upside of the range and low side of the range. Those in the mentorship, you know already the assignment that I gave you, I think on Thursday, is going to be of use once we have either a strong break to the upside or a strong break to the downside. If we have a strong break to the upside, then we need to apply exactly that buy model that I showed you guys. If we have price massively break to the upside, then we need to wait for price to come back into this range for us to see further moves to the upside. That's a buy model scenario. If we have a strong break to the downside, right, we need to wait for price to come back into these two equal lows here. The same way we waited for price to come back into these two equal highs when market breaks to the upside is the same way that we're gonna wait. If we get a strong break to the downside, we wait for price to come back to these two equal lows, right, for us to see further continuation to the downside. So already from that analysis, you can see already that I've given you a scenario which you don't go into the market blindfolded. You see, you know what to do when you open the chart. You're not blind. You know already that you can't just go straight, say, to a 15-minute over and decide that no, I'm going to go short without the higher time frame insight of what the market is going to do. You see. So now I'm gonna go onto a H4 time frame. So now on the H4, you can clearly see to the downside. If it's a case that the market trades to the downside, I'll only be interested at this level here, right? 92.50, the 92.50 price point. That's when I'll get interested in the market. Where it is right now, that's a pivot point. That's like 50% of the range that I've told you guys. And for me, that's a no man's land. Market can trade either ways, of which I personally don't know which way it's gonna go. But if it does drop to 92.50, then considering what fundamentals that we'll be getting at that moment in time, I'll definitely be making a decision. Or if we trade back into this rejection block where our bearish order blocks are, See, this is our daily bearish order block. Then I'll be looking for market to trade to the downside. But if it breaks and closes above, I have to take note the way it breaks the consolidation. Was it a strong impulsive move, or it was just like a slow break of the consolidation? In that case, I'll need to wait. But if it's an impulsive break to the upside, like a big bodied candle, then I'll have to wait for price to come back into this level for me to go to the upside. So you can clearly see now the scenarios that I've gave you guys. But take note, our higher time frame bias dollar index is the dollar is weak, meaning short trades are ideal, right? Short trades are ideal, but as a trader, you should be dynamic. You should know that you're supposed to make a decision. Whichever way the market is trading, you have to be in a position to make a decision. So, but we need to align it with our higher time frame bias, of which at this moment, our higher time frame bias is to the downside. That means short trades are ideal on dollar index. That makes it long trades ideal on Euro USD, and short trades ideal on USD JPY. So yeah, that's pretty much about it for this week. And those in the mentorship, if you have any questions, just send me a Telegram message, and I'll definitely get back to you. But I hope this short and precise analysis will help you in making a decision on how to trade the other assets that you're going to be looking at. So I wish you guys good luck and happy trading in the coming week. Thank you.